Hey, what's up? It's Sean Rampersad here with TMG, the Mortgage Group, coming to you with another video about mortgages. Today, I'm going to be talking about how to get a mortgage and what are the banks looking for. Tons and tons of people call me about this because they don't know what the banks want in order to qualify for a mortgage. And not everyone's scenario is perfect. So this video is going to explain how to get a mortgage and what the banks are looking for. So first and foremost, there's about 11 or 12 things that the banks are looking for. Number one is going to be income, okay? So they're going to look at your overall employment. They're going to find out, are you getting guaranteed hours? Okay, so that's the first question on how they establish your income. Or are you on a salary? Do you get paid a base salary of $50,000 or $100,000 per year? That is what guaranteed income is. Second of all, if you have no guaranteed income, what they're gonna do is they're gonna take an average of your last 2 years if you've been at the same job. Or if you're on commission, they will also take the average of the last 2 years to establish what your income is. But those aren't the only income sources. A lot of people work part-time or casual. If you're working at a hospital and you're in a casual position, they normally will say, these are the minimum hours you work. If you are changing jobs and you're on probation but are in the same industry, again, they'll take a 2-year average of your T4s to establish your income. So that's how they qualify income. But there are other sources of income. Some of those sources are Canada Child Benefit. So if you have kids under 14, we can use the Canada Child Benefit income to 100%. Okay? Spousal support. If you're getting spousal support or child support, we can absolutely use that income to help you qualify for a mortgage. And if you have a pension, we can also use your pension income to help you qualify for a mortgage. And there's multiple pensions. Like in Canada, for example, there's the Canadian Pension Plan, CPP. There's EI, okay, employment insurance. And then there's work pensions as well that you might have, or you could be a part of the Saskatchewan Pension Plan. That's another type of pension. There's multiple pensions that would help you qualify. So that is your income portion and an employment portion of a credit application. The second, they're going to look at your credit. So if you have a 600 credit score on Equifax or TransUnion or above, you can be considered for a mortgage with 5% down, okay? If your credit score is between 600 and 680, they're gonna look into it more in depth, but you can get a mortgage with 5% down. For the best rates, your credit score is gonna have to be above 680. You'll get the absolute best rates if your credit score is above 680. And finally, if you're below 600, what do? I'll tell you, you can still get a mortgage. We have many lenders that will take people under the 600 credit score to get you a mortgage. Now, you can't do it with 5% down. You're gonna have to put 20% down if your credit score is less than 600. 5% down is for 600 credit score and above. Next, they're gonna look at your down payment, okay? They're gonna look at the preferred down payment. Is it coming from own resources? That means the money is coming from you. It's saved in a bank account or in an RSP or in a tax-free savings account, something like that. That's the ultimate. So normally in that case, they look for 3 months bank statements. The second form of down payment can be as a gift. So direct family member, mother, father, grandparent, sister, brother, they can gift you the funds and the bank will not question that at all. And finally, the final source of down payment that you can have is a borrowed down payment. So you can borrow from your RSP, you can borrow from your line of credit, you can borrow from a credit card, whatever it might be, that can be used as your down payment. Next, if you currently have equity, the banks will consider this an asset, but they'll rely more on number 1, 2, and 3. So employment, or income, credit, and down payment. Number 5, another way that you can get a mortgage is get a cosigner. So if you don't have the credit to get it done, or you don't have the employment to get it done, you can get a cosigner on to co-sign the loan for you. So that's also gonna assist you in getting a mortgage. Guys, if you like the video, please like and subscribe to the channel. It helps me make a lot of good quality content for you in the finance and mortgage market. Again, my name is Sean Rampersad. I'm the absolute easiest way to get approved for a mortgage in Canada. Please call me anytime. My number is 780-278-4847, and comment below if you have any general questions so that I can answer it and answer that question for anyone else that may be asking. Thanks again. Talk to you again.